Hi there, a very good morning and good afternoon to all of you, depending on wherever you're hearing me. This is Simply Stocks, and I'm live in this live podcast. This is Simply Stocks, and I'm live in this live session with you all, and hoping that you all are doing well. Uh, Hopefully, you people are doing extremely well, and your trading and investment is going well as well. Today, I want to talk to you about the Paytm IPO, the Paytm IPO that has got subscribed that will be listed in 2 or 3 days' time. Would like to discuss about that, and we'll answer your queries as well. Hi, good afternoon, Vignesh. Also, would like to tell you that I have made some changes for the you can say members on YouTube. Uh, Afternoon, Rajesh. So maybe Rajesh would have had a look. So I'm going to upload one video every week, probably of earnings, probably of something else for a couple of companies that would be having earnings and earning description and what I feel about the stock from those levels, and that will be exclusively for YouTube members and Patreon members. So kindly become a member on YouTube, and you'll be having access to such videos every week. One exclusive video. The first one has just gone out on Astral and Kilpest earnings that members can have a look. So that's there. Plus, you can join me on Patreon. You can join me on WhatsApp as well. For that, you have to email me, and probably with an yearly subscription you can join me on WhatsApp. It's the same thing. You'll get the same benefits as somebody on Patreon or a YouTube. All right, so we'll discuss about the Paytm listing, how the listing would end up being, and how the listing will be, and what needs to be done with the stock. Plus, we'll answer your queries. So let more people join in, and we'll begin the session in earnest. Uh, as far as the markets are concerned, after making lows of 17,700, 17,800, the Nifty has now surged up, and it looks like that we could be headed higher for the next 1 month. So, as explained earlier, uh, about a week back in my session, that next 1 month could be very interesting and could be very bullish in my opinion, and we could head towards 1900, 19,000, 19,300, 400. At that point of time, I would suggest people to take their money off the table, and those who are trading into the market, those who have a 3 to 6 months time frame viewpoint and have bought stocks for trading, should take their money off and come in cash, and probably wait for a 8 to 10% decline from those levels. Let the market come back to something like 17,500 or so, and then begin investing again. That would be the right strategy, or begin buying for trading again. For investment purposes, at around 19,000, 19,500, probably avoid buying into stocks even for investments. Uh, Wait for any 5-7% dip in the market, or any 10 to 15% dip in the stock, to start accumulating those stocks again for 4 to 5 years time frame. I think the market from 19,400, 500 would look extremely stretched on the, you can say, earnings of around 680 that would come out for this year, 680, 700. So on that sense, I believe that it's better to probably take your pedal off, and wait for some sort of a decline. I won't be surprised if January would end up being the month where there is complete bloodbath and there is a heavy fall in the market. So in that regard, next 4 or 5 weeks could be extremely good. And if you're making 25-30% over this 2 3 months period since October, better to take some money off and then probably trade. For investors, I think next 3 years will be extremely good. So just pick your you can say stocks very wisely, and just stay the course with them, and you'll make good amount of money. All right. Well, I have been a science student. I have been a chemistry graduate. So yes, and this is my nephew who's in 12th, and has been doing this, or learning the periodic table, etc. So Yes, so I have been there and done that, and thankfully now I am into stock market, which I find much easier than those science classes and practicals. So yeah. Anyways, Shiva, hi there. So let a number of people join in. Probably they'll take about 5 minutes to get in. So to tell you frankly about one more thing, this is for all the members on Patreon, YouTube, uh, that my investment strategy, which has changed, and I have put up a lot of podcast about it. It's because of this reason that if the market goes to 19,000, 19,500, 700, it's going to be extremely stretched on the short term basis. So at that point of time, if I am as a investor who is looking to make 20, 25%, 30% annually, is able to get 30 to 40% in 2 3 months, it's better to probably, for me as a retail investor, as somebody who is not investing big in the market, to take profits home and then have that capital to invest at lower levels. That's what I have thought. So that's where the strategy has changed. Rather than putting in the money and waiting 3 to 5 years and then taking out the money, which is also absolutely fine for those who are into a lot of, you can say, income sources and can eke out incomes from a lot of sources, as I meant with that, then they can keep on investing, keep on building that corpus of investment. No harm there. Happiest Mind, Kilpest, Sequent, all these companies will keep on churning you Asian Paints, Pidilite, 20-25% CAGR. But for me, who is into the markets, who's earning from the market, who's learning from the markets, and that's how I'm doing my livelihood. And that is why I would like to probably build my capital or initial corpus through a little bit of trading at these valuations of 18,000, 19,000 Nifty, and then probably invest big whenever a fall of 15 to 20% come in, and I'm always cash ready in that sense, to invest at that point of time and just sit back on my investments for a 2 3 year period. So that's where the strategy has changed. So if, for instance, I have any share. For instance, I have an Asian Paints at 3,000, currently at 3,150, and I have it for a 2 years perspective. And I see that over 2 years, okay, if I'm able to make 50%, if the stock goes to 4,500, I'm fine, I'm going to get out. For instance, in the next 1 month, it goes up 30%, it goes to 4,000, 3,900. So why won't I take the money off that? Whatever returns I was thinking will happen in 1 year or 15 months, that's 30%. If you take 50% in 2 years, then say 30% would be possible in something like 14, 15 months. That is happening in 1 month. Then why won't somebody take profits off? So that's where my mindset has changed. So if the market is giving returns early than what is expected, then I would definitely like to take profits home. And that's how I'll do it with my stocks. And those who are on Patreon and YouTube might be understanding which stocks I'm talking about. Although I want to make this thing clear that all the stocks that I have held over the last 1 year and have shifted from, all are very good investments. All are technically as well as fundamentally strong stocks. They will churn a lot of money for you over 3 4 6 years. So there is nothing that changes for the company. There's nothing that changes if you have an investment mindset and you want to hold 4 5 years. You can definitely do that and keep on investing in those stocks on 15 20% decline. So there's nothing that changes with that respect. It is just that my mindset and my way of putting money in the market has changed, because I wanted to take advantage, or I want to take advantage of such kind of strong moves that are taking place. And after missing out on a Happiest Mind at 1600, after missing out on a Sequent at 330, missing out on a Kilpest with a 1 month doubler move, missing out on a IRCTC selling at the top at 6,000, 6,300, be it 5,500, 5,400, any levels that I was not able to, thinking that those will be huge over 3 years. Yes, they'll definitely be big over 3 to 5 years. But if something like a Kilpest is up 100% in a month, or IRCTC up 300% in 3 months, it was prudent for me to take profits off. So now, if I'll get that opportunity in any of the stocks, such kind of you can say extreme moves, if it happens in stocks, I'll be more than happy to take profits off. Again, that doesn't mean that those stocks are not investment bet and cannot go up in the long run as well. All right, so coming to the Paytm thing, and I'll discuss about that and then answer your queries. About Paytm, the company is good, everything is fine, the brand is good, there's a brand recall to it, a resonance to it, and a lot of people use it. In fact, uh, I think around more than 4 or 5 crore at least. There have been downloads of Paytm already, and people use it. So this is 197 communication that I'm talking about as the company. Now, where does the issue lies, and why I'm saying that I would avoid such an IPO, and you might have guessed it. The problem lies in the top and bottom line both, actually, especially on the bottom line. So if you look at FY19 numbers, in FY19, they had total sales of around 3,580 crores, and they had a loss of around 4,230 crores. So 4230 has been the loss, and 3,580 crores have been the revenue. So the loss is much bigger than what the revenue is itself. Then we come to March 2020, and this was just the beginning of the pandemic in India, when the lockdown and everything shut down happened. From 3,580 crores, the revenue dropped to 3,540 crores, and the losses also dropped. So losses also got curtailed to 2,940 crores. But you need to understand that the revenue is not quite growing. Now, if a company is making losses, that's one thing, but if their revenue is also not growing, and they are making losses, now that is something to be concerned about. So from 3,580 crores in FY19 to 3,540 crores in FY20, to 3,190 crores, or 187, 3,187 crores in FY21. So the revenue has consistently dropped, and in so this year in June, the first quarter, the revenue has been 948 crores. If we extrapolate that, even we get to around 3,800 crores or so. So revenues is nothing too great to write home about. If you look at losses, from 4,000 to 30 crores, the losses has gone to 2,942 crores to 1,700 crores. So it has reduced. Uh, and in June it was around 381 crores, so it looks like it will reduce sharply lower. But you need to understand that revenue is getting a hit, and the revenue is getting a hit because the company itself is having a lot of competition from the Bheem UPI app, from a lot of apps that are now available, from the banking companies who are providing UPIs as well. So in that regard, I don't see a huge move in Paytm that could come up over, you can say, the next 1 month, 2 months. What I see is probably a good listing, a decent listing around 2,000, 2,100 rupees, and might fall 10 to 15%, rather than going up in a manner like 15, 20, 30% over very quickly over this year, unless the numbers completely change and they come out with very decent numbers. So that's the call on Paytm. I would say, in my opinion, I would just give it a pass. We'll see how the numbers pan out, and then we'll see that what needs to be done in that. All right, so I'm ready to answer your queries. Kindly use the super chat and super sticker feature that will help me grow the channel. That will help you also ask me questions and eke out answers in greater detail. All right. Manoj, Acrysil looks good because of its expansion and everything. I believe that Acrysil on any declines to 770, 760 is a good buy from a trading point of view. From a 1 year perspective, I see 1,000 on the stock over a 1 year time frame. Say latent view is a decent IPO. Let the IPO come in, let it list. Probably it will be on circuits. Let the stock stabilize and then get into it. Rather than just applying in the IPO, you can definitely apply in the IPO. If you get some lots, I think the listing will be extremely good. But I would prefer buying after the listing and after the stock is consolidated, etc. All right. Okay, Sequence Scientific, see Samajit, what you need to do is probably now hold on to it. In 6 months' time, you will see your price, hopefully. I think from February, March onwards, things will look much better compared to what it is looking right now. So I think 160, 170 should hold. And I think your price, or at least 230, 235 should come in where you can just book your loss. You won't make a lot of loss and probably move ahead. It's going to take time, Sequent and Loris, to move at the moment, at least 1 or 2 quarters. Mastake, a disclaimer, I am invested in the stock. Probably you can hold on to it with a stop loss of 2650, I think a target of 3300, and then even 3800 possible in the next 6 months. So that's what I'm looking for in Mastec. Nifty range in November, extremely difficult to say. Probably you can see 17,500 to 19,000. That's what I'm looking at. 18,800 or so. So 17,500 looks a decent support on Nifty. Right. Santosh, thanks for your contribution. Birla going up and down and view on Garware Tech. FIB. Well, Karware Tech, I would say avoid at the moment for the time being. Birla Corp, sorry, I think you're asking about Birla Soft. So, in that sense, you can buy at these levels. I think these are attractive levels. 390 is a good support, but IT companies may struggle for a while. But from Jan Feb onwards, I think the next 6 months could be extremely good for something like Birla Soft. Yeah. So Nika, again a disclaimer. I'm invested in the stock. I think we have to wait for the results. Results are today, and then only I can just let you know as to how the stock will behave. We'll definitely post on YouTube for the members. And Nikhil, as you are a member, you'll be able to have an idea as to what needs to be done. Okay. Datamatics, decent company, but there are many other, you can say, mid cap IT companies that you could look into buying into probably. Okay. I would avoid both. I think Nath Biogen, Kaveri Seeds, I would avoid. I would look at larger pharma companies to probably buy into, larger mid caps to probably buy into rather than these. I don't have a view on TTML. Need to have a look, and only then I can let you know. Zensar is a good company. I think if you can hold long term, can give you 18-20% CAGR. The results were not that great, but not bad either. I think if you're patient with it over 2 to 3 years, the returns could be decent in the stock. SHIL, well, the results were good, but you need to understand that the margins have dropped a bit, and compared to Acrisure, it's not performing at the same level, but the valuation is attractive. So hold on to the stock. I think 400 is a strong support, and hopefully the up move will begin soon. Santosh, thanks for your contribution. Zelfmock is a very decent company. Probably on declines you can buy, but again, do not expect a trading move in the stock. Probably over a period of 2 3 years will become big, will do extremely well. And Nikhil, I have talked about SHIL already. A disclaimer: I have the stock. Probably 400 is a good stop, and next target is 520, 530 on the stock. So Asian Paints is good. Asian Paints on declines to 3,100 could be good levels to accumulate. 3,050, 3,100 from a long-term point of view. All right. Lawrence, thanks for your contribution. Infobean for long term. I would say uh, don't take it from a long term point of view. Have an idea of probably gaining 20-25% from current levels and then exiting, and then looking at it when the market declines a lot. rather than just buying at these levels and holding on. So do not buy it for probably a very long term, say 2 3 years. In for me, yeah. uh, TCS at current levels, I would say TCS would be something that can be bought on declines. That would be better. Again, something at TCS, HUL, Infosys, Asian Paints, all are good buys whenever the market declines big. So Info Edge around 5,500, 5,600 are good buys. You can start buying here. I think on further declines, have some money to buy on further declines. Uh, Newgen is a decent company. Newgen is something that can be looked at these levels. It has declined from the top. Accumulate here, probably 700, 750 possible in a year's time. And that's where you can book profits or probably hold on for 2 3 years even. This is a good company to hold on from a long term point of view. Polycab looks good. I think Polycab looks set for a 3,000 target over the next 3 4 months. I think by March we could see 3,000 on the stock. Any declines to 2450, 2500 is good level to buy. 2470, good levels to buy. Sonata again 810, 812, good levels to buy. 770, add more. Again, whenever the IT move begins, these are good companies to get into. Tata Elxsi for 1 year, difficult to say because in the last 2 years it has gone up 6x. It's better to wait for major declines in Tata Elxsi to buy into. I think HIL can give multifold return, but the last quarter numbers were not so special. So that's why probably I won't say that you go in big time. Start accumulating the stock, and probably in 4 5 years' time, it could be huge. This company, yeah. See, First Source did not come out with very good numbers. So if you have bought it at lower levels and you're making good amount of money, it's better to book profits. If you are stuck up with the stock, then don't sell at the moment. Wait for an IT rally to probably book out. That's the call. Prince pipes on declines a buy. If you are holding, hold on to the stock. I think the pipe companies, etc., should do well over the next 3 4 months as the construction activity is going on. So they should perform well. Okay. Apollo Tricot. I need to have a look and only then I can give you an idea. At this point of time, I cannot say anything on it. Procter and Gamble Healthcare is a good company. Again, it's like a portfolio stock that you can buy and probably hold long term rather than trade into it. That's my point. Okay. Chemcon specialty. I think most of the chemical companies kindly stay away. I have a feeling that it is now they are now topping out. Very few chemical companies probably that are in the list that could do well. I think it's a whole sector. I would say an avoid. It has already moved up for last 5 6 years, so it's an avoid at the moment. Okay. GC Ventures. I would say absolutely avoid the company. Mahindra Holiday is also an avoid. Look at other companies which have less debt or virtually debt free to look into. I think Loris Labs may get a base around 440, 450. Very good levels to accumulate. Wait for 2 years. I think it could really go up in 2 years. I think 70, 80% return easily possible in the stock. It would start performing, I believe, from March onwards, February or March. So that's the call. Zomato looks like going up from here. I believe that Zomato has taken out the previous high, is going up. I think 180 and then 210 possible on Zomato in the coming weeks. I don't have a view on Policy Bazaar IPO. I will just skip it completely. Okay. I am Motherson Sumi at 230, 235 good levels to buy rather than something like a Bosch. I think it can give you 20 to 30% over 1 year. Motherson Sumi. All right, guys. Thank you. Thanks a lot for being online, and would be again online on Thursday evening, and hopefully to see you then. Thanks a lot for watching, and kindly do subscribe to my channel and hit the bell icon. Thank you.